there are a lot of people buying gold on Wall Street. A lot of billionaires are buying gold. They see the things are shifting in the background. They know, they see central banks become 20, 25, well, not quite 25%, but over 20% of the gold market is being bought up by central banks. So there's some big dynamic shifts happening with the monetary system, with rates, as we know, all the other issues going on. So we're seeing some big buyers come into market.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics, and excited to have a return guest on the show, Mr. Peter Spina, who runs GoldSeek and SilverSeek, one of the few sources of information left that's dedicated to getting people information about gold and silver and the things that are going on, which I love reading, and I especially today where we see the prices of the metals down again. Really appreciate what Peter goes through to keep that going. So with that said, real quick before we start, go ahead and hit the subscribe button so you can stay posted, as I'm fortunate to have great guests like Peter give their insight. And again, with that said, Peter, it's a pleasure to welcome you back in on the show. How is everything going with you today, sir?
Hi, Chris. It's great to be back. And also thank you for such a great show that you put out. You help a lot of investors in a market which isn't easy, being a contrarian thinker when you have Tesla going to almost $1,000 a share, and all these bubbles and easy money being made. Trying to put some sanity in all this insanity that's going on in the financial markets and elsewhere. It's not easy. So.
Well, I appreciate that, Peter, and you got me hooked. Now I'm curious how many hundreds of dollars Tesla is up today. We're recording on Tuesday, February 4th. Oh my God. Tesla is up $119 at trading at $8.97. Oh my goodness.
Got to get in before it gets above 1,000. Last chance, right?
I think it couldn't have been more than 2 weeks ago when I had someone on the show and they were saying Tesla's, in the 400s now, and I corrected them saying it had hit 500. Wow. So there you go, up $117 while the miner's getting pounded again today. And Peter, I think a lot of people are sharing that same emotion, and perhaps more important than digging into any of the technicals today, what would you say to folks that, are feeling that today, where they're seeing the tech bubble go on and they're watching their mining shares get pounded and saying, why am I doing this? Is it worth it to stay in there? And you're certainly darn qualified to answer that one. So I'll let you take that away.
I think it's important to step back and take a long-term perspective on all this, because you can get so caught up in these daily moves, and the volatility has definitely been increasing. Silver last year going from almost 14 to almost $20, and then shooting down to the 16 area, and now 17, 18. It's really starting to open up, and it's fun when it goes up, but it can feel brutal on the way back, because it feels like you're taking off and that's it. And okay, sure enough, here comes in the slam, and it's easy to kind of move this tiny market around, and there's a lot of money to be made too by these traders. So you got to recognize there's going to be a lot of different battles at different little price zones. There's a lot of people leveraged to the short and long side of this market. And it's also a bigger shift, fundamental shift that's taking place that's going to make gold a lot more valuable. But just recognize that it's a process that we're going through, and it's hard to see it too, because the U.S. dollar is strong. Yeah, the markets are hitting new highs. Everything seems to be great, but the underlying problems get bigger and larger, and things seem to get a little more crazy as we get deeper into all this. So don't lose perspective of that.
Yeah, I appreciate you saying that. I often think of it similar as to the dynamic building before the housing bubble, where, remember those Peter Schiff videos where he'd talk about, if you'd go to his family barbecue or Thanksgiving and warn that housing was a bubble, and they'd get into fights over it. yet maybe that's part of the game where to capture these things, you have to be willing to eat that pain for a little bit. Is that a good analogy for folks to draw back to?
For sure. I mean, it's always good to take general sentiment indicators and see what families, at meetups are talking about, what other friends are talking about who are not really following things as closely as you are, because you can kind of see what the crowd is thinking. And it's just at the top of the bubble. Of course, most of people are going to be interested in the same thing and kind of mimicking the same point of view. So gold is a contrarian investment. Silver is a contrarian investment, and it's not something that you're educated about in school. Definitely not, or you hear a lot in the media. But there are a lot of people buying gold on Wall Street. A lot of billionaires are buying gold. They see the things are shifting in the background. They know, they see central banks become 20, 25, well, not quite 25%, but over 20% of the gold market is being bought up by central banks. So there's some big dynamic shifts happening with the monetary system, with rates, as we know, all the other issues going on. So we're seeing some big buyers come into market, record holdings in gold products. So the interest is there. The retail and general crowd have no idea what's going on because they're being, distracted by what they think is it's going to just continue on and on and on in eternity, and it's not. And eventually, Tesla is just a sign of the craziness of what's happening right now. So we'll see how long this lasts, but it could, it could still take quite a while before this thing really pops and
Yeah,
people
it
lose.
sure is wild. Although, if I may get a comment on the record here, just seeing the Tesla price, this is based on absolutely nothing, but there's something about my intuition wonders, geez, are we getting close to something popping here? And who knows, maybe it'll be $2,000. I heard there was a guy calling for $1 trillion market cap. Although something that I don't understand, this could be because I went to a public school here in the U.S., so I'm not claiming to be the brightest bulb in the world here yet. If the economy is so great and these companies are so great, why is the Fed doing these massive repo lines to prop up the banking system every night?
Yeah, why are they involved suddenly? Why did we go from quantitative tightening to quantitative easing? Why is all these issues showing up? Right? Why are they cutting rates? All these things suddenly. I mean, it's absolutely amazing when we look back a year ago, what we were looking at rates, hitting 3% or plus on the 10-year, and now we're looking at 1.5%. And who knows, in a year or two from now, might be down towards 0% and negative rates globally, where you have 13, 14 trillion and growing, and real rate of returns on all this different debt. Even the US now is going negative more and more. So the case for holding gold, boy, it just grows. And the more, I think, as you see more of these bonds yielding negative returns, you have banks issuing negative rates, or I think in Germany there was an article last week, $40 billion or 40 billion euros worth of cash in German banks with negative yields. So what are they going to do with that? Where are you going to put your money? You don't want to be, why are you lending money to the bank and all these other problems? Yeah, it's amazing. A lot of people are just ignoring it, but it's happening.
And these central banks and politicians, they come out and say the economy is great, everything is fine, but then they buy gold. So isn't that a bit contradictory?
Well, they're cheerleaders and they always have to be optimistic and play that game. But yeah, I mean, I don't really listen or believe whatever comes out of their mouths. So
So like always, follow what the money does, not what the politicians say.
absolutely.
Good strategy in the long term, even if it does involve days like today. Although I'm curious, if central banks are buying gold, is there some point at which they start buying silver? Maybe not because they think it's money, but just because if you're buying gold and you expect gold to increase, and then you see silver not only 50% over 50% lower than its 2011 high, but 50% lower than its 1980 high, with all the debt and money printing piled on. So curious your thoughts on the silver market.
Yeah, it seems to be more for the institutional and retail investor, not central banks. Maybe silver-rich countries like Mexico that could buy up some domestic demand, but they're all these a lot of these silver-rich countries do need those U.S. dollars and rely on those metals to obtain those dollars, so they're more motivated still to sell that commodity and build up their forex reserves. But that could be different. That could change, right, in a big crisis where you don't want to have that many dollars because it's starting to lose value very quickly and depreciating. So you find more stability and maybe withholding some silver. But that's I don't really see a huge potential from the central banks buying into silver, unfortunately.
Well,
And it's
central. Go ahead.
And just one more thing. I mean, it's just a small market too. The gold market size is much more liquid and larger for a central bank to operate in. Silver is so small. Even retail demand can really overwhelm it. So it's hard for larger investors, especially central bank, to play a large role in that.
Yeah, that makes sense. Although silly central bankers aside, one of the questions I get from folks who watch the show is really the comparison of gold versus silver. So what's your view, and how would you phrase that to people who might be new to the metals and are wondering which one to go into?
Well, the gold price I see is in a bull market. It's emerging into a long-term phase here again, where it's going to go much higher. That's going to really take silver a lot higher as well. But initially, it's not going to be silver, which is going to be the winner. It's gold, which we've been seeing so far. But the ratio, we saw it hit 95 or so to 1 about a year ago. Those are near record levels, and considering the different ratios of silver to gold from just mining it from the earth, which is in the mid to upper teens, say, ratio, to the current silver ratio, which is near 90 to 1, or a longer term ratio in the pricing of 60 or 65 to 1, and we saw it go to in the 30s about 10 years ago. I mean, it's so easy to make a case now that silver is a lot better by lower risk, higher reward than gold is, even if it just is taking a bit longer to get going. But when it does get going, it's going to outperform gold. It's a high beta precious metal, which is, to me, is an excellent way to leverage the gold price higher. Especially right now too, the silver bullion from the Silver Eagles in the last few years, the sales have been very dismal. For the last, I think, decade, we've hit record amount of bullion sales from the Treasury, U.S. Treasury, and there's a $2-3 or so or more premium on these Silver Eagles when you buy it per ounce. And when you have low mintage years and the market's going to come back, I think you can do very well on those premiums as well. We saw them drive up to $5 to $10 an ounce 10 years ago. So there's a bit of a play on that too. So I love buying last year or two mintages and the Silver Eagles. So great time to be accumulating. Love it.
That makes a lot of sense. Especially, I was wondering if you might be able to comment on this, where gold, primarily viewed as monetary demand, insurance against governments and central banks. Silver has that component, like you pointed out, maybe not quite to the same degree, although silver also has that large industrial usage where, I don't know, maybe people will or won't think gold is money. I think we're in agreement that we'd be better off if it were money than paper currencies, yet regardless of people's opinion, my understanding is that if we want to continue using cell phones, electronics, going green, and all this other stuff, you simply have to have this silver. And everything I've been able to find is that the numbers are a bit tight and there's not much room before you have an issue. Is that your perspective as well?
Yeah, the inventories are tight. It wouldn't take much of investor demand to overwhelm the existing inventories because it is primarily an industrial use, and we do need it in our modern lifestyles, even if it may be slowly slacking as the economic cycle shifts here. The commodity markets have been hit hard the last several days, last few weeks. Copper had, I think it was a record 12 or 13 days down in a row. So that's been kind of dragging too on silver. But industrially wise, it's been doing, holding up from solar cells to other uses in electronics. It's been doing pretty well. And as, with its primary byproduct of copper and other commodities too. So as we see these kind of lower commodity prices, because commodity prices are at multi-decade lows as well. It's amazing. So there's not a lot of new production of silver coming out as well. So like you say, there's a problem there. If you get a strong retailer, strong investment demand coming into the market, it can quickly overwhelm the supplies.
Yeah, and in that case, that something like that should occur, would we see something like two of the other commodities which have gone against the trend in palladium and rhodium, which are really, are they going Tesla yet? Is that that's my new phrase I've invented, when something goes Tesla, which palladium and rhodium have been. So I'm curious, any thoughts on what's going on there?
Sure, when it turns out into an all-right auction bidding war. Yeah, we saw it before in silver when it went up to $50. It was, whatever supplies you could get, they got really tight. So you start getting into these bidding wars, and the price reflects that. If people are going to rush into precious metals, and we see what small percentage people own today on a whole, it's half, 2/3% or something of total assets. It's nothing. So there's so much easy money out there. There's a lot of cash out there, and if it starts flooding into the market, you can get these spikes, especially in these small markets or precious metals, and silver definitely is a candidate for that. So maybe it'll Tesla for sure.
Yeah, I think that's going to be my new catchphrase, and maybe I'll get T-shirts made up.
I like it.
Although, I guess the way I look at it, either we're massively right or massively wrong. I'll let anybody else decide which of the two. Although, it is interesting to think, should we be indeed correct and we're watching a stock and bond bubble, and we see how much money is going into some of these stocks like Tesla, if our thesis is correct that at some point the metals are going to experience some of these cash flows, what does that look like if you have all that money coming out of some of these tech stocks and bond markets and then go into the metals?
The price of these miners are so cheap right now. No one really cares about it. It's reflected in the share prices. It's just dismal. Probably the market cap of Tesla today and yesterday grew by the total amount of the total precious metals mining sector. It's ridiculous. When the money starts to flow into it, the miners are really going to see massive increases. And I think we're in the initial few innings of that process. We've seen some of the miners do quite well over the last year. Some have gone up 50%, doubled, tripled, and others have started to pop. And there is some interest, but very minimal. And as it starts to grow, it'll attract more interest. And it just, that's kind of just how markets happen. As more and more money is being made, more people start paying attention, and then the flood comes in. And money moves so fast these days, it just takes a mouse click basically to move all sorts of money around. And little tiny gold, silver, precious metal stocks, they'll catch fire, and there'll be massive pops in these. Potentially, I think they will be massive pops in these stock prices.
Yeah, it'll sure be interesting to see how that plays out. Last quick one for you here. It was great to catch up with you at the Vancouver Resource Investment Conference. Curious, any thoughts you had there about the overall tone, the feel? I know a lot of folks felt it was a better, more positive environment than previous years. So anything you could share on that?
It was a lot better show than last year. People were distracted by the other bubbles in blockchain the year before that, and then last year was cannabis. And those all popped, and a lot of people made quick money and quick losses. Easy come, easy go. But mining sector starting to look interesting. Canadians understand mining a lot more, especially in the exploration side. There's a lot of tax incentives too for them. They can do flow through financings and things that the government does incentivize their investment. But regardless, they're paying attention again. Not nothing too overwhelming, but more people are paying attention. It's a good sign. I think a lot of the actions of the last year with the rate cuts and the QE4 and all these sudden changes in the market, they're starting to pay attention to the price increase. So it's a good sign. Still early days. Having seen the market kind of at its peak in the prior cycle, it's definitely early days. People's enthusiasm is picking up, but nothing, like we see at top of a bubble or top of a market.
Yeah, certainly doesn't seem like we're there quite yet. So, Peter, I appreciate you sharing this. I'm sure there's a lot of other folks out there watching right now and feeling similar bafflement at some of the things going on. And I know people are throwing in the towel as we speak, which I get. Although, again, I just sure appreciate all that you do, all that you stand for. The honor and integrity that you've displayed throughout this sector. And perhaps just in closing, you can let folks know where they can find you and how they can keep up if they are still looking for some good information about these metals.
Sure. Thank you for those nice words, and I appreciate the support. And gold investors need to know that the last 10 years, the rules says game has changed. So they just need to be patient and look at pullbacks as buying opportunities, and don't be afraid to always take a little bit off the table when things make a quick run higher. So you can play these moves. It makes it easier if you can. Otherwise, GoldSeek and SilverSeek.com. You can find some updates there, and on Twitter at GoldSeek, do some updates and post some thoughts on that as well.
Yeah, they are good sites, and perhaps if anyone's wondering what or how to think at this point, if you ever get a comment of someone who explains how the debt and money printing burdens are going to be resolved, then by all means share it. Although I think perhaps that's the simplest way to know that it will come to an end one day and will be good times for the metals. So Peter, I thank you again, and it's great to hear your voice as always, and we'll have to do this again soon.
Likewise, I look forward to some justice in this world, especially in the monetary side. So patience, we'll get there.
Sounds good, my friend.
Take care. Talk to you soon. Thank you.
So that is today's episode. I do thank you for spending some time with me and hope you enjoyed it. If so, go ahead and hit that subscribe button, and I'll see you again soon.